Jim Cramer about Tesla stock quant earnings. Investors should know this. Jim Cramer, the host of CNBC's Mad Money and a reporter for Squawk on the Street, revealed certain insights about Tesla's first quarter earnings that every investor should know. Tesla Inc. was down 4% as the company prepared to release its first quarter earnings report. This decline was accompanied by lower than average activity, implying a scarcity of traders and investors looking to enter the market ahead of earnings. When Tesla reported a significant fourth quarter earnings beat on January 26th, the stock dropped over 11% the next day and sank another 4%. The following day, Tesla announced $17.7 billion in revenue for the quarter, beating the $16.4 billion average projection. The company announced $2.54 earnings per share, topping the $2.26 consensus expectation. This came as no surprise to Cramer, as he fully expected CEO Elon Musk to wow investors during the conference call. With the stock prices going up and down, many investors seem to be on edge. What are Cramer's insights and how can investors apply them? Keep watching to find out. In the United States, James Joseph Cramer works as a TV host and author. He's a reporter for Squawk on the Street and host of CNBC's Mad Money. Cramer was originally a hedge fund manager and a senior partner at Cramer Berkowitz. Cramer also runs the CNBC Financial Club, and he has stated that he founded the investing club in order to assist all investors accumulating long-term wealth through the stock market. He plays with an open hand and wants to assist investors in making more informed investments in order to develop long-term wealth. Sticking with what works would save you a lot of headaches. Jim Cramer said to his Mad Money viewers recently that implies only investing in firms that make money and pay a portion of those profits to shareholders while keeping a sustainable share price for their growth rate. According to Cramer, those requirements may appear overwhelming, but they aren't as stringent as they appear, and they are the only thing that is functioning. This is hardly applicable to Tesla, though, as it isn't a dividend stock in essence, based on Cramer's statement. It's an outlier. Tesla shares aren't cheap, and the firm doesn't pay a dividend, but its growth and success are undeniable. Tesla recently released its first quarter earnings for 2022, and both the top and bottom lines beat analyst projections. Automotive revenue increased by 87% year over year to $16.86 billion. Tesla reported a gross profit of $5.54 billion in its primary business, pushing automotive gross margins to a new high of 32.9%. Regulatory credits accounted for $679 million in automotive revenue for the quarter. According to Tesla's shareholder presentation, revenue growth was fueled in part by an increase in the number of cars delivered and an increase in average sales pricing, and the brand isn't slowing down. Tesla it's unveiled its new German electric vehicle plant recently in hopes of dominating the European market, aiming to expand its manufacturing beyond the United States and China. Following the announcement, Jim Cramer stated that everything was falling into place for Tesla at the perfect time. Cramer said, "I think Tesla stock is ready to have a major run." And he's not alone in that opinion. Analysts predict that Tesla will attain an overall run rate of roughly 2 million units by the year. According to Cramer, Tesla also appears to have worked out how to deal with supply chain restrictions better than the competitors. Cramer also stated that the ribbon-cutting ceremony at Gigafactory Berlin highlights the company's de-risking initiatives in relation to China. This makes sense, as China has been the backbone for Tesla car productions for quite some time, and we all know it's hardly safe to put all your eggs in one basket. Tesla stock, according to Cramer, is a significant leader in the electric vehicle industry. According to the NBC host, Tesla makes the best electric vehicles. He compared Tesla's electric car market domination to Ford Motor Company's market supremacy after the release of the Model T and Model A. Cramer stated that, quote, "Everyone has electric automobiles, but Tesla really sells electric cars. We certainly agree, as the numbers don't lie." Tesla announced vehicle deliveries of 310,48 for the first quarter earlier this month, the closest estimate of sales provided by the firm in the 3 months ending March 31st, 2022. Model 3 and Mode Li vehicles accounted for 95 of deliveries, or 295, 324. And it seems the company has no plans of slowing down during the firm's earnings call. Tesla's CFO, Zachary Kirkhorn, and CEO Elon Musk claim that they are sure that the company can grow by at least 50% by 2021. However, due to COVID-related shutdowns, the company lost nearly a month of build volume in Shanghai and will need to ramp up productions to meet its goals. Kirkhorn added, quote, We've resumed limited manufacturing and are aiming to return to full production as soon as feasible despite the slowdown. Musk believes it's likely that Tesla will be able to produce 1.5 million cars this year. He said that customers who order now face a long wait and some of their items will not arrive until next year. Musk also admitted that progress in autonomous driving was slower than he had anticipated in the first quarter of 2022. Tesla solar deployments fell by over half to 48 MW. Compared to the same period last year, the company installed 46 MW of lithium-ion battery energy storage systems, up 90 from the previous quarter, but down from the previous year. Tesla attributed the drop in solar deployments to import delays on specific components beyond its control. Cramer advises that investors brace for the turbulence ahead because the second quarter is off to a rocky start. Things may get worse before improving. On the other hand, Tesla Shanghai is back with a vengeance following the quarterly release, barring the fact that we are missing a couple weeks. He believes we will witness weekly record output from Tesla's Shanghai facility this quarter. Despite any new obstacles that arise, analysts expect sequential growth to pick up considerably more later this year, particularly in the second half of 2022. According to the company's fourth quarter statement, production levels at existing plants will improve while production at new factories will begin in 2022. The company's German factory has already begun production. Tesla stock had been on an extraordinary winning streak last month. The stock rose in March despite the threat of inflation, higher commodity costs, raw material prices, and higher interest rates. Tesla appears to be benefiting. Recent rise in oil and commodity prices as well. When Tesla raised prices, it demonstrated its pricing leadership. On the other hand, Tesla attempts to satisfy rising demand rather than reduce it. According to electric Tesla's order books in the United States are full until 2023. However, May has not been so great, and it seems Cramer's predictions are coming to pass. Tesla stock is currently around 700, which may come as a surprise, seeing as it was $1,000 what felt like just moments ago. Tesla's share price is most certainly being dragged down by CEO Elon Musk, who spoke at the Financial Times Future of the Car 2022 yesterday on a variety of topics, any of which may be the one that irritated investors recently. What did Musk say that drove stock prices down? According to Musk, Tesla's sales are increasing and the company's cars are now more popular than Ford's classic model. He also stated that he intends to lead Tesla for as long as he could and be useful. Lastly, he said it's not out of the question that Tesla would buy a mining company to assure it has access to metals like nickel and lithium, which are essential in producing rechargeable batteries for electric vehicles. For the time being, Musk and Tesla are focusing on developing and selling electric cars, leaving the challenges of obtaining raw materials to create the batteries to their battery suppliers, such as Panasonic. Tesla's sales skyrocket with earnings more than 650% above the previous quarter. Tesla has now had 11 consecutive successful quarters with profit margins twice as high as its biggest automotive competitors. While buying a mining company may look good on paper, if Tesla purchases a metals miner, it would incur more costs and have to learn a completely new business strategy. It will risk diversification as it invests in areas where it isn't as strong, such as creating gigafactories and churning out 1 million automobiles per year and rising, as well as areas where it isn't as strong, such as mining. However, as Cramer stated, Musk knows how to really sell electric cars, and if anyone can make it work, it's him. What do you think of Tesla possibly buying a mining company? Comment.